Hi, this is Mogan Kumar from Brainy Bulls. I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. So, in this video, let's take a look at the Nifty chart for April 19, 2023, and see what kind of signals the strategy has triggered. Let's quickly get into the charts. Perfect. So you're looking at the two chart view in the trading view platform, the Nifty spot and the Nifty futures chart side by side. It is set to be on a 3 minute time frame. So before I bring on the three indicators, let's look at the chart, okay, and see the kind of price action it has made. It's quite interesting, right? I mean, it opened flat, and the price was kind of range bound for most part of the morning until noon, and then price suddenly reversed from a point right here, okay, and it had a very severe fall, okay, from the top, and it broke the levels, the support, and it went and fell further, and then it reversed back again, and it closed somewhere right in the midway. So it's a very interesting price action. So like you see, every single day, the price action is different, and every trading day is completely different, right? So that's the challenge we have when it comes to trading. It's very difficult to judge, to gauge the price action and the moves it's going to make, whether it's going to be a sideways move, or it's going to trend higher or trend down. Nobody knows what the market is going to do, right? And I do not follow any news, and I do not actually kind of like anticipate, or I do not actually guess which side the market is about to move. I don't do any of that, right? I That is why you need to have a very powerful strategy that you can rely on. And even though every single trading day is different, if you want to bring similarities and certainties to your trading, you need to have that kind of strategy based on powerful indicators, which can actually bring certainty to your trading. Okay, so let's bring on those indicators, right? The three indicators which forms the triple threat strategy, the price levels, right, and the market participation represented by those dots, and the trend meter, right, which is built based on the stochastic. But again, I keep telling that it's not the out of the box stochastics. There are other parameters which has been taken into account, and this indicator has been customized, to work with Nifty, right? And it's exclusively built for Nifty to work on a 3 minute time frame, right? And these two charts, though the indicators, the concepts are all the same, the parameters built on the indicators on these two different charts are completely different. Okay, hence these indicators give different signals on both of these charts. It's not the same, right? Perfect. Now look at the same charts. So we do a lot of checks before the market begins, right? And we do some checks post open, right? And then we wait for first 30 minutes for the markets to show some kind of price action, right? To confirm which side the market is headed towards. So we're going to skip all those checks part in the interest of time and quickly get into the price action and the signals that the indicators are giving for us to enter into a trade. So the markets opened flat. It's between two major locations, the central pivot range and the previous day low, right? And the price is almost in a congestion zone within the EMAs, right? And whenever the price is within two major locations, the price will be range bound, right? So it's clear as to why the price was consolidating. When we looked at the naked chart, we didn't know, there was no reason why it was consolidating, but when we brought in those locations, it's very clear as to why the price is consolidating, right? It's within two major locations, and the price is within the EMA band, and hence there's a lot of congestion, and the price was consolidating. Okay, that's the reason. Look at the trend meter. Trend meter, no, for most part, it was consolidating, and then it is in the green zone, right? And we know for a fact that the price is going to move higher, but we don't know how far it is going to move because it is below the EMAs and it's all falling EMAs. It has a lot of traffic. It has to steer through the traffic, and it's not there is no certainty as to how aggressively the price can steer through this traffic. So we didn't have enough participation when the trend meter indicated it's at the green zone. We did not have enough participation on the spot chart, but on the futures side of things, you could see some participation that has come in here, right? And since there's a lot of traffic, and there is not much of a good risk to reward, we're not going to take any trade, right? So we're going to wait further to see what happens when the price gets into the EMAs. And you could see the price was range bound for most part, and then there was a spike to the upside, going above the EMAs, and then suddenly the price retraced back, and it was like kind of chopping all over, and finally the price made all the way, from the bottom to the central pivot range, which is another major location, right? And the price made to the topmost point, the high of the morning range. And as the price goes to the high of the morning range and the price is at the CPR, look at the trend meter. It is right in the zone. It's peaked out, the zone of reversal, right? And it gives a trend price conflict on this side. The price moved higher, right? As you could see very clearly, the price moved higher, right? But the trend meter indicated that the trend was not that strong on the upside. Okay. And with all kinds of participation here, right, and the location, the central pivot location, so we have all three signals and all three conditions met. The prices at a location that we need to be considering, a major location, central pivot range. The the signal the the participation is quite phenomenal at this level, right? And then also the trend meter indicated that the price has peaked out and it's about to reverse, and there is also a trend price conflict. It's a very strong indication that the price is going to go down, and the price was consolidating for most part in the morning, and now there should be some big move that we should be able to see because of these indications. So we take a trade. This is our candle. This is our stop loss point. This is our entry point. And if you're an aggressive trader, you could have actually entered the trade right below this candle, and your stop loss is right here, right? And beautiful trade. The trade actually, if you follow the trend meter, you could have held on to your trade until this point right here, correct? So this would have been your place where you could have actually booked your profits. But if you're a conservative trader, right, when the price comes to another major location from the top, right, it's range bound, you would see some kind of action right at this level. As you could see, in the price move to this previous day's low, the black line right here, you could see some volume candle popping up, and there's some indication of the participants entering. So if you're a conservative trader, you would have booked profits. If you're an aggressive trader, you would have booked partial profits here. Let's say if you're trading with 10 lots of Nifty options, you would have booked 50% of your lots right here, held on to your 50% of your position, trading a stop loss to the green moving average, and you would have booked profits, once the price broke this major level. And if you see some serious participation coming in, there is a pin candle, and this is where you could have booked your profits, right? So it's a wonderful move to the downside, and you capitalized on a big move of the day, right? And you made some good profits. So this is how you trade, based on facts, and it's not gambling. If you trade based on facts, it's not gamble, right? It's a perfect, there's a perfect solid reason behind your trades that you take, right? If you want to make trading as your career, if you're very serious about getting into trading and becoming a full-time trader, a professional trader, you got to know the basics. You got to learn, and that's the first step, towards getting into the trading business. So if you are liking the content that you're seeing, if you're interested to get to know the strategy and the basics, and become a professional trader, please do contact me. There's a beautiful course that I've actually created, right? And it's an end-to-end course that's going to get you started with trading. Okay, so please do like the content, subscribe to my channel to get timely updates on the videos I upload. And until I see you on the next episode, please take care of you and your loved ones, and please do contact me, to get to know the details regarding this course. Thanks a lot for your time, and bye.